Okay, good afternoon to everybody that's here. Good morning if you're calling in from the US. I'm Alex Sumer and welcome to this week's SaaStock Sessions and also the final SaaStock Sessions of this month. But we'll certainly be bringing this back on a regular basis. So yeah, just to see who's here, say hi in the chat. You can see the chat function. Say hi, let's see who's here. For those of you that are looking to raise money at the moment, looking to raise investment, why don't you also mention, what, I guess, kind of stage that you're looking to raise at? Are you looking at seed, Series A, and so forth? So drop those in the chat, say hi, say how you're feeling, and whether you're looking at raising capital. Obviously, today's session is raising capital in a time of crisis. We're running this session on Hopin, which is the platform we'll be using for SaaStock Remote. So you will see that we have the chat function, we've got the polls function in the middle. So please feel free to answer the questions in the polls and respond to that. You'll see the people function on the right-hand side. And you'll be able to kind of engage with folks directly, message them directly if you hover over their images. And note that when the content finishes, we can go over to the networking section and we can have some fun 45 minutes of speed networking and connecting people across the world at a time when we can't meet in person. Note there's also an expo hall. If you want to go there, I believe there are booths from the SaaStock team that are answering any questions around SaaStock Remote. So the aim of SaaStock Sessions is really to provide you with stories and tips to help you get through this period, of the pandemic, COVID, of a recession, upcoming recession. We want to connect everybody at a time when we can't be connected, and in the run up to SaaStock Remote. Bring people together and just provide some valuable content. So we've got four, fantastic investors that have joined us today to give up their time to give 10 minutes each of one story or tip to really kind of help you understand how to raise capital, right now or in 2020. Just to say, obviously, this is in the run-up to SaaStock Remote. So I don't know who's heard of SaaStock Remote. You can drop this in the comments if you've heard of it. Maybe you can work out the emojis, give us a thumb up or thumb down if you haven't heard of SaaStock Remote. But this is our conference happening on June the 10th and 11th, which is all about helping, SaaS founders, execs, companies adapt, survive, and thrive through these times. It'll be a 2-day event on June the 10th and 11th, 150 speakers, 3,000 plus attendees using the Hopin platform, various stages of content, sessions, roundtables, matchmaking, and so on. So this is a very small glimpse at the possibilities of how we can enjoy online events and online conferences in the run-up to the bigger events. Right now, SaaStock Remote is, we have an offer for everybody that is here. That is, if you use the code SaaStock Sessions, you get 20% off your tickets for Remote. I implore you to go to saastock.com/remote just to kind of check out everything about the conference. At the networking point of this SaaStock session, I will be sticking around, and if anybody that I get paired with randomly, whoever gets paired with me will win a free ticket to SaaStock Remote. So if you are interested in that, stick around for the networking. It is super cool. We get great feedback around the networking functionality here. Plus, if you pair with me, you will get a free ticket to SaaStock Remote. So stick around for that. Continue to talk in the chat in terms of what you're looking to do, in terms of the size of round that you're looking to raise, the stage that you're looking to raise, answer the polls, in terms of say the running order today, we've got four amazing, very kind of short and sharp talks. So I'll welcome our first speaker without further ado. And that is Elizabeth Yin, who is the co-founder and general partner at Hustle Fund. So let's welcome Elizabeth. So I think she should be coming on now. Hi, Elizabeth.
Good morning.
Yeah, how's it going?
Good.
You in San Francisco?
I am. I look like I just rolled out of bed.
No, I just look like I'm on a beach in
Yeah.
Hawaii, but it's not. Actually, the very quick story behind this shirt was it was one of our colleagues' 1 year anniversary today. So we all wore something celebratory. I had a nice floral shirt on earlier, but it was a more going out type shirt. And it didn't really fit very well after lunchtime. So I've gone with something a bit more baggy, but positive.
I like that.
Positive vibes. Anyway, look, I'll leave it with you. I know that you will be talking about understanding what resources are scarce and what sources are abundant around you. There may be time. I know that you're keen to take some questions. So if you have questions for Elizabeth, drop those in the chat during her talk, and we'll be able to come to those during that. And I'll leave you with it, and I'll be back in 10 minutes, Elizabeth. All right.
Thanks, Alex. Good morning, everyone. It's great to see so many people from all around the world. Just a quick intro on me. So, Alex, thank you for the introduction. I am one of the general partners at Hustle Fund. We are a pre-seed VC fund. We invest very early in US, Canadian, and Southeast Asian companies. But I think what a lot of people don't know about me is that prior to starting Hustle Fund, I actually was an entrepreneur for many years as well. And in particular, actually in 2008, I was working at Google here in the Bay Area, the San Francisco Bay Area. And I decided at the end of the year to leave. And as many of you may remember, that was wonderful timing to leave in late 2008. And after I left my job, I could raise no money. So I started my company during the last recession. And actually, as a result of not being able to raise any money, it forced me to actually make some very good business decisions and really learn how to run a business. And in retrospect, it was actually great that I couldn't raise any money because I had no idea what I was doing. So with that kind of context, I'm just going to dig in. I mean, I think some of you may already be facing some of the challenges of raising money in this environment. And I think there are really two drivers that are happening now. Certainly one is that many of us are in, lockdowns or shelter in place. You can't go and meet investors in person. And as a result of that, investors are taking calls certainly over video conference, but many investors are not used to that. That's just not their workflow. They're trying to figure it out. But even if they can, there's still many investors who are a little bit shy to actually move forward. And I've heard a lot of fellow investors tell me that they cannot seem to get conviction over video conference. And so these conversations appear to generally go nowhere. I do think it is possible to raise money in this format from angels and microfunds like ourselves, who may have already been doing this and maybe writing smaller checks. So there's a little bit less at stake. But if you're looking to raise $1 million, that starts to become quite challenging if you didn't know the investor from before. The second driver of this is that there's a lot of uncertainty around the market. And so some VCs have just decided, all right, let's just cool down the deals. They do have capital to invest, but for the time being, while people are figuring things out over the next few months, the pace is a little bit slower. So those are kind of the two things that are happening that you may already be noticing in your own fundraising conversations. And so let's kind of just dig into this. Well, how do you solve for that? How do you move your company forward? And actually, one of the tips that I want to give you today is pretty much what I used during 2008 and 2009, which is I didn't have any money to hire people. And frankly speaking, that's what you kind of raise money for, right? Most people most people raise money because they want to either hire people or maybe pour money into customer acquisition channels. Those are probably the two biggest things that people do with money that they've raised. Well, as it turns out, actually, in this market, there are a lot more people who may be available to actually work with you. So why not just hire these people directly with your equity instead of selling your equity for money and then hiring people with the money? Just cut right to the source. And that's exactly what I did in 2009. And so I think, we can talk a little bit at a high level about how to do this. And I feel very self-conscious about talking about the nitty-gritties because I realize that people in this audience are from everywhere and maybe largely from Europe. And I have no idea how this works from a legal perspective in, many places. And I think my advice from coming from the not be 100% applicable, but I think you can do similar things, which is what I did in 2009, which is essentially I came up with a convertible note with my lawyer that allowed us to be able to hire people in exchange for their time. So if you assume that, let's say, this person you want to hire on a contract basis, it commands, let's just call it, I don't know, $75 an hour or whatever it is. The effective use of that person's time is $75 an hour. You know, they put in, let's say, 100 hours. Now you're issuing maybe a convertible note that's worth like $7,500. So that's how I was able to hire a number of contractors just to get going in the beginning. Now, I know we only have 4 minutes left. I do want to open it up to questions because this seems like a really ridiculous idea. And I have not seen that many people do this, but it worked well for me. So go ahead and shoot some questions over in the chat, and I'm happy to dig in. Steve Nestor actually asked, well, I actually struggled to find co-founders interested in equity only. And I do think that there are a couple things here. One is, you know, finding a co-founder is about a good fit, not only in personality and in skill set, but also in what people want in life. And so I think, if I'm going to be honest here, it's going to be a matter of searching a lot to find somebody who's actually a good co-founder. And you know, even in an economy where you can raise all the money you want, you probably don't want to be paying your co-founder a boatload of money. You probably want your co-founder to be mostly incentivized by equity. So that kind of applies in every market. And I think, you know, my answer there is sort of twofold. One is keep looking if you're looking for a co-founder. But I think the other thing is, with my suggestion here, it's not just about finding a co-founder. It could be hiring a contractor for a few hours on an equity basis. And you do have a lot of people coming from top talent out of companies who may have been forced to let them go. Like you've heard about the massive layoffs at Airbnb and Uber and many others. And so there are a lot of talented people out there on the market who have a fair bit of time on their hands. And even if they cannot afford to spend 100% of their time with you, you may be able to snag a portion of their time, you know, 10 hours a week while they're looking for a job, 20 hours a week while looking for a job, or whatnot. And they may not be actually a co-founder. They may just help you get to that next stage. The next question, I think, is from Dario. How, as an investor, can you add real value? Intros, connections, how smart capital. So I'm not 100% sure, Dario, whether you're talking about me per se or investors as a whole. I mean, for us at Hustle Fund, we focused a lot on customer acquisition and helping our founders raise money, because we are writing small checks and we know that many people want to raise more than our 25K. But I think for investors as a whole, like as a larger point, you know, the other thing in this market is you may also want to find out what is it that investors are doing for their portfolio companies. Beyond the money they're putting in, can they introduce you to other investors? Or can they even help you with some of these things? Like some investors actually have operational staff who can help their companies with things like design or thinking through scale on engineering or hiring even or whatnot. So those are definitely questions in any market that I would ask an investor, like what is it that they can help with? But certainly in this one, when you're thinking about hiring and you don't have very much cash. Any other questions? Well, great. It looks like I am pretty much at time anyway. Thank you for listening, and hope this tip helps.
Thanks, Elizabeth. Just on that, so I know you'll be speaking at SaaStock Remote on either the 10th or 11th of June. Do you know yet, whilst it's 3 weeks away, what you'll be speaking about? What session you'll be involved in?
I'm going to be doing a fireside chat with my friend Rajiv Iyengar, who runs a hot remote company called Tandem. And so actually to that end, two things. We're going to talk about how he runs his company remotely, and also just in general best practices for building culture, communicating, all these hard things with people, and how to do that remote while actually, you know, having a great company. Awesome. Excited for that. And really appreciate your time today and sharing with the audience and answering their questions. Thanks very much. Thanks for having me, Alex. Thanks. All right. Here.
Okay, we will move straight on to our next guest. Just a reminder, we have 3 more talks, and then we will partake in the networking section, which will be good fun. So do stick around for that. I see we've got about 160 people online at the moment. If you haven't introduced yourself in the chat, please do so already. If you haven't answered the poll question, please do so already. But looks like we've got a good crowd of people here. Let us know again if you're looking to raise capital in the chat. So let's welcome our next guest. We have the general partner of Notion Capital, Jos White, and somebody who has grown and scaled a massive SaaS business in Europe, one of the biggest exits in Europe to date. And running a great B2B SaaS fund, Notion Capital, which has been a long-time partner of SaaStock. So let's welcome Jos White to the stage. And I believe Jos is going to talk about, let's see, here we go. It's Jos. How's it going?
Hey, Alex. Yeah, good, thank you. How are you?
Yeah, good. Let's see, I'm dressed for the beach, and the family are at the beach, but I'm obviously not at the beach, but doing something more interesting, I think.
Yeah, I like the Hawaiian shirt. My t-shirt feels a bit boring.
Yeah, no, keeping things positive, and on that note, there's been actually quite a bit of investment in SaaS companies, during COVID or during the last sort of like month or two. Has there been anything or any particular investment that you've been quite excited about yourself?
Well, I mean, we've definitely remained open for business. We have done one investment actually in the travel industry, so taking a very contrarian view and showing that we're not afraid to take risk and hopefully looking longer term than the current environment, but that hasn't been disclosed publicly yet. But I've got lots of my companies that are seeing tailwinds as well as headwinds. One in particular is a company called Brighter, which is a German company based in Germany, and they are in the IT space, so they actually make it possible for high value knowledge workers to automate a lot of the advice, a lot of the expertise that they have. So they sell into consulting firms, law firms, governments. And so they really are automating and making sort of people-based processes more scalable. And they're seeing, a lot of success in the current environment. So I'm very...
Awesome. And you're going to be speaking about the focus on efficiency and opportunity in the short term, and continue to articulate the power of your vision in the long term. Is that right?
Yeah.
Awesome.
That's right. Yeah. I think when I started to think about, yep.
No, I was going to say, I think we lost your video there. I don't know if you're went to kind of share a screen or something, but I can only see your silhouette right now. Let's see if we get your video.
I am sharing my video, so
okay.
I don't know whether it dips out if there's not enough bandwidth or something, but it looks like I have enough bandwidth. So
okay.
Hopefully you can hear me okay.
All right. Well, let's see. I don't know if people mention, maybe it's just me if people can see you, but certainly can hear you. Okay. Well, I'll leave it to you, Jos, and yeah, we'll crack on with your talk, and I'll be back in 10 minutes.
Okay. Great. Okay. Hi everybody. Good to be talking about the current environment and hopefully providing some insight and advice about the current environment. I think we've had a lot of negative things or the way that the current environment is holding us back. But I think there's a range of different ways to look at it. So I'm a general partner at Notion. We are a VC that focuses on SaaS, as Alex said. So all we do really is enterprise software, enterprise SaaS, mainly at Series A and some Series B stage. We're based in London. We invest across Europe. We have more than $500 million under management, and about 65 companies in the portfolio that include companies like Tradeshift, Dixer, GoCardless, Currency Cloud, Workable, Muse, Paddle, to name a few. Anyway, so in this brief time, I was asked to just talk about some advice about raising capital in a time of crisis, and I thought I'd just divide it up into two sections. One is in the short term, and then one is in the longer term. So I think in the short term, you have to have some awareness about the crisis that's going on and how that impacts you. I don't think you can just sort of brush it aside, although sometimes maybe we'd like to. So what I mean by that is when you're articulating your business plan to an investor, I think you need to talk more about efficiencies and less about growth at all costs. So an investor is going to want to know that you're going to be spending their money wisely, that you're going to invest in a kind of step-by-step way, and you're really going to drive efficiencies, things like CAC payback, things like the magic number, things like sales cycles, ACV, revenue per employee, these kind of metrics that I'm sure we're all familiar with, which to the idea of a business. When times are better, and raising money is fairly free and easy, we tend to often companies will front run on costs, and they will be very, very laser focused on growth, and that can sometimes work. It can definitely work when you can keep raising money, but in a crisis and in a pandemic like the one that we have, there's no certainty about when your market's going to reopen and when your market's going to be more receptive to your proposition. So I think to conserve cash, to drive efficiencies, to lengthen the runway, and to ensure that you're spending in a step-by-step way rather than, as I think is really, really important to emphasize. And the other point in the short term is, I think a crisis gives an investor the chance to see how your mind and how your team work in real time. So it's almost like a kind of insight into how you can operate in uncertain times, how you deal with, how your environment, which you didn't predict, which you didn't expect, which certainly none of us could have predicted. So there are usually ways that you can adapt your business, whether that's adapting your target market, whether that's changes to the product, changes to the message. There are ways that you can adapt your business to take advantage and to reflect the crisis that we're in, the environment that we're in, that it will give an investor the chance to really see you operating in real time, which I think is really interesting and really, really valuable. So I have a couple of examples of that in our portfolio. We have an investment in a company called GlowFox, and a SaaS platform for gyms and fitness studios. So they do SaaS plus payments proposition. Clearly, the market that they serve is very severely impacted by COVID-19. We invested and accelerated the development of a virtual product to enable their customers, to enable their gyms to deliver real-time virtual classes and content available to download. They actually they had it on the whiteboard, but it wasn't in their immediate plans. They actually accelerated that. They built it and released it to the market within 2 weeks, and it gives their gyms and fitness studios a product to sell. And I think when we return it, gyms will be thinking about their position in a more kind of hybrid way between physical and digital anyway. And so this really was an opportunity for them to help their gyms to deliver this kind of virtual offering. Another example is a company that I mentioned, Brighter, who provide a RPA for high value knowledge-based advice and expertise. They were able to approach governments, particularly the German government, to help them to automate the way that they evaluate and qualify inbound requests for their government loans and government grants. So governments are absolutely inundated with trying to qualify inbound requests for the various capital that they're making available. Brighter were able to go to government with a way to kind of automate that process, so they could evaluate the inbound requests much faster, more efficiently, which is something that situation and they've had some real success with that product. So a couple of examples of I think how to be opportunistic and take advantage of the crisis, and also show an investor how your team works. So that was some advice in the short term, but then I just wanted to talk about the longer term. We actually founded. I was a co-founder of Message Labs, which Alex mentioned, which did antivirus and anti-spam in the cloud. We actually founded Message Labs in 2000. We managed to raise money just before the first .com bubble burst, and we weren't able to raise money again. But I think in many ways it made us a better business. Because we had to really think about how we spent our money and think about profitability and really think about the way we were running the business without any certainty of when we'd next be able to fundraise. And I think that was good for us. But I think another thing that we did well was we never changed our vision, our long-term vision, which was really to scan internet traffic in the cloud. So by the time it reaches you, it's clean and free of any malware. And actually, many of the best companies, many of the most famous businesses out there were founded in times of recession. So that includes Disney, IBM, Microsoft, Google, and actually Salesforce just before the .com crash as well. So it can be a good time to found a company. I'm a big believer that great things come from adversity. So when we're in adversity, when we're experiencing difficulty in the middle of a crisis like the one that we're in, different type of thinking, it can lead to creativity. We can maybe have the time and space to rethink our routine and rethink the way that the world is or the business environment is currently served by products and services. Lead to a time of great creativity, stimulation, a way of thinking which is just different to your usual way of thinking. So I would articulate your vision and not apologize for it. To articulate your in the same way as you would have done if we're not in a crisis. So you want to make a major impact on the market that you're addressing. That normally takes 6 to 12 years to do. So the crisis that we're in is maybe 2 years. As I said, it can be an interesting time to found a business. Great ideas come from adversity. I think office space costs will go down, talent will become more available. But I don't think the longer term vision should change necessarily at all. Should be just as clear and just as forceful about your long-term vision as you were before, and don't feel that the current crisis should put you off from that kind of conviction. I think any good investor is thinking long-term in exactly the same way that you are, and so they should be in tune with that longer-term vision if you're going to get the right kind of investor that's aligned with what you're doing. So I think that wraps up my 10 minutes, but hopefully there's some valuable thoughts and insights there.
Yeah, absolutely, great stuff there, and I love the Glowfox story there, the speed of innovation, and I guess kind of pivoting to provide the virtual solution is something great to see. Obviously, the rumor has it that Glowfox raised their first round at one of the SaaStock events in the past. Is how they met the Notion team.
Yep, that's true.
True. We confirm the rumor, and you'll be speaking at SaaStock Remote, and the Notion team will be there. Also, do you know what you're speaking about yet?
Yeah, I'm going to talk about, I mean, I touched on it a little bit, but I'm going to talk about the concept of measured growth as opposed to unmeasured growth or growth at all costs, to talk about a way of growing, but really ensuring that you're doing it in an efficient way that makes the most of the money that you've raised and extends the runway, which is, I think, the right kind of balance for how we should be thinking about things right now.
Well, looking forward to that, Jos. Thanks once again for today, for sharing with our community, and for being a big supporter of SaaStock since the very first edition in 2016. And so yeah, looking forward to seeing you and the Notion team in June at SaaStock Remote.
Great. Thanks, Alex. Looking forward to it. And yeah, it's good to be back at a SaaStock event. Even if it's remote, it still feels, like a great gathering of SaaS luminaries, experts, and everyone in the SaaS ecosystem, which is great.
Thanks, Jos. Definitely. Okay. All right. So next up, we have Christoph Janz, who is the managing partner at Point 9 Capital. He should be teleporting onto the main stage shortly. So let's welcome Christoph.
Hey, hi Alex, how are you doing?
I'm good. How are you?
Good. Hanging in there. How about you? Are you working from home in Dublin, or where are you?
No, I'm in the Kent coast in the UK. Yeah, working from home. I think as many of us are and can still do that. Perhaps we will extend the working from home indefinitely. We'll see how that goes. I know you've been working from home for a long time, 10 years or so, right?
That's right. Well, actually, because we have a distributed setup with our little HQ being in Berlin, and me living in a different part of Germany, I have a little office 100 meters away from my where I live. That's, I think, after kid number 2 came, I think it was just too busy at home. So I benefit from having an office that I have just for myself now that I can still use. But yes, we've been used to working remotely with people in different places for a long time. So our operations, so to speak, aren't really disrupted.
Amazing, good stuff. And I see you got some brownie points there for wearing an original.
Yes, is that the first one or one of the first ones?
There we go.
Yeah.
Very good.
Vintage.
I've got a few of those.
Yeah.
Yeah, good stuff. Well, look, I'll leave it to you. I'll be back in 10 minutes. I know you're leaving with, or you're going to share some tips and tricks on fundraising during COVID, and I'll see you back in 10 minutes. Okay.
All right. Thanks, Alex, and hi everybody. I have a few slides, and I'll try if I can make the screen sharing work. If you give me a second. Okay, there is an error message. It says something went wrong. I'll try it again, and otherwise it's also not that important. Okay, you should be able to see my screen now. It's just a couple of slides because I think I have only about 10 minutes, but yeah, so the topic that we're talking about is raising capital in a time of crisis. And if you think about the world we're living in today, I think it's a pretty strange time if you consider that on the one hand, we have more than 300,000 deaths and counting, unfortunately. And some major industries like travel, automotive, restaurants, and others are down in terms of their sales by 50, 60, 70, and in some cases up to 90%. And unemployment in the US is expected to hit 25% or something in that region. And then on the other hand, the Nasdaq is close to an all-time high. Has already regained all of the losses from the from the decrease a couple of weeks ago. And then specifically, if you look at the SaaS stocks, and I think most people who are in the audience are interested in SaaS, they're actually up 25% since the beginning of the year. So it's a strange time, and I think there is a huge bifurcation currently going on, and I think this will also have an impact on what I'm going to talk about in a few minutes when it comes to fundraising as a startup during these times. But let's maybe have a quick look at what the data says so far in terms of how is VC financing affected. I pulled some numbers from Crunchbase, and there is a caveat that the data quality is probably not perfect, or it's obviously not perfect, but it's obviously missing some companies, and there is also a time lag because companies sometimes don't announce their financing rounds for days or weeks, or in some cases months. This is not accurate, but I think it shows a very clear trend. If you look at the number of early stage deals in April 2020 compared to the year before, and then like the first half of May this year compared to the year before, you see that the numbers are all like down 40, 50, 60, 70%, depending on which part you're looking at here. Then interestingly, if we look at the amounts raised, the previous slide was the number of deals. If you look at the amount that has been raised, there is a significant drop as well, but it's not quite as sharp. So it means that the average deal size actually went up, and I think this is again also a pointer to what I alluded to very briefly in the beginning, that there is a huge divide. Companies that benefit from the crisis because they offer like something like Hopin, I guess, what we're using right now, or anything that's related to remote collaboration, online video conferencing, all of these companies that really benefit from this, or companies that have been able to adjust or pivot so that they can benefit from it now and in the future. They are pretty well off, and then they continue to be able to raise, whereas companies that are not able to make that change, they are obviously suffering. And I want to finish here with a couple of tips and trips. Sorry, this should be tips and tricks. I finished these slides just a couple of minutes ago. So just a few tips and tricks for like fundraising during these current times, because I know that's a big concern for a lot of founders who wanted to raise or who have to raise during these times. The first one is maybe obvious. You need to have a response to COVID-19. So you need to have an assessment of how is your business affected, and how are you going to respond to it. That's probably quite obvious, but I still wanted to mention it here. Then you need to run a process, and that's always been important. I think now it has become even more important, and if we still have time, I try to explain that a little bit. I think you should start with a long, and actually a longer than before, list of potential investors, and maintain a good pipeline, which means that if some investors drop out because they go silent or they give you a no, then you should add more to the top of the funnel. You should really look at it as a sales process. And I think the reason is you may have to do that because there are just some investors that in the current time struggle to run their processes and maybe struggle to gain conviction over the distance. But maybe the good news is that you also can talk to more investors and have more conversations in parallel today than previously, because the process is just more efficient when there is no traveling and no coffee meetings and no lunches and dinners involved. That is also something that we saw with several portfolio companies. Along the same lines, I think you should qualify or disqualify ruthlessly. Like if similar to how you would have a sales conversation or a sales process, like if you talk to a VC and you pitch them over, let's say, over Zoom, and then there's just no good follow-up. They don't look at the data that you send them, or they're not really asking more deeper questions. Then you should probably assume it's a no, even if you didn't get a no, rather than trying to like almost lie to yourself that this could still work out. I think it's really important to be really honest to yourself and assume that this is not going to be the one that's going to bite, and then spend your time with more likely, more promising candidates. And the last point here, and I've been saying this pre-corona many times, that you really need to spend time creating a really awesome deck and having your KPIs together and prepare your due diligence materials. I think it's always been important. I think it's even more important now, because with less personal interactions and maybe less opportunity to wing it and to really sell people like sell your vision and your story in a face-to-face meeting. I think the way you present your product and your company and your numbers, and if you really have your act together there, and how efficient you are in terms of like that asynchronous communication, I think is even more important than it was before. And with that, I'll stop the screen sharing, and I think Alex is coming up again as well.
All right. Thanks very much for that, Christoph. Enjoyed that as usual. I know that one of your talks, was it the 8 do's and don'ts for SaaS startups, which you did, I think, with Nick Franklin. Probably was it at 2016, or was it maybe after? Is one of our most popular talks on our YouTube channel. I don't know if you were aware of that.
No, I wasn't. That's great.
Yeah, good stuff. So on the note, you mentioned about the no's with people that obviously when investors pass on a deal. Do you give feedback on every deal, or is that possible as to like where the reason that you're passing on this? We saw this sort of recently. One of the things, I think it was on a Fred Destin sort of tweet about the feedback or things that founders would like to improve, was just around getting more feedback. What is your view on this? Is it possible to give feedback to everybody that you give a no to?
Well, we try to, and I think we try to give the more feedback, the more time we spend with the founders. First of all, because then if we spend some time with them in the process, we probably have a more educated opinion, and also kind of like we owe it to them then if they spend time with us to give them solid feedback. We try to. We're not always great at it. It's just with like it's basically a limited number of hours in the day issue that maybe we and maybe others are not always as good on that front as we definitely should be. With regards to companies that we don't take a close look at because we just look at the deck and somehow we don't get excited, I think we often don't have great feedback, or it would be quite superficial. But I think in that case, I think founders, and happy to hear feedback from anybody who might be listening now, appreciate a quick response even more so than a thorough one. So just to know where they are at and where they can spend their time. So we, if there is a trade-off between giving a quick no and dragging it out and trying to give a more detailed answer a bit later, we try to err on the side of being faster. But obviously, ideally, we would be able to take a close look at every deal and have a really thorough response, but that's unfortunately just not possible.
You're obviously speaking as all the speakers today at SaaStock Remote. So you're joining us, I believe, on June the 10th. And I think you've got an interesting fireside chat sort of lined up with somebody that, if correct me if I'm wrong, that you don't always believe in necessarily their opinions, right? So it could make for a spicy conversation. Would that be fair to say?
Yes, absolutely. So I don't know if I'm allowed to say who it is.
Sure.
Yeah, well, I'm going to have a chat with David, the founder of 30 Signals, famous for building products like Basecamp, writing books together with his co-founder Jason Fried, and for having very strong opinions, which I almost always disagree with passionately. And I have a huge amount of respect for what they've built, but I also think that they give amongst the worst advice that you can give to startup founders, and that they've almost I don't know what's the right term for this. I think they've created confusion for almost an entire generation of founders, which costs me a lot of time to argue against. But I'm really looking forward to that chat.
Okay, well, so am I after that background. So definitely we'll be tuning into and adding into the calendar. But looking forward to that, Christoph. Thanks so much for sharing your time and your lessons with our audience and our community as always. So thanks very much, Christoph Janz. We'll see you on June the 10th.
Awesome. Thanks very much, Alex. Thanks everybody. Thanks everyone who was listening in. Take care.
Thanks. Yeah, if you enjoyed that by Christoph there, please let him know in the chat section. If you have any questions for Christoph, we'll also drop those in the chat, and we'll see if he can answer those as well. So we've just got one more talk. Just a reminder, after this talk, we have the networking. So stick around for that. I can see that we've got a good crowd here. So it will make it for a really fun experience. People from all over the world connecting together. Hopefully you won't have spoken to many of the people that you connect with in the networking. And so you'll make some new connections, valuable connections. So yeah, stick around. So we have one more talk. It is pre-recorded. But it's a talk from Philippe Botteri, who's a partner at Accel, and they invest in a ton of great SaaS companies. You may have heard of some of them, like Slack, and one I won't get the pronunciation right of, but I think it's pronounced Snook, of which we announced that the founder, Guy Podgeny, I believe, is speaking at SaaStock Remote also, and I'm sure Philippe Botteri will be interviewing him at SaaStock Remote itself. But without further ado, I will welcome Philippe, who is obviously pre-recorded, and he'll be talking about 5 tips to make it easy to raise during COVID. So let's get that on.
Good afternoon. My name is Philippe Botteri, and I'm a partner with Accel, based in London. Accel is a global venture firm with offices in the US, Europe, and India, and we're focusing on early and late-stage investments in mostly 3 areas: software, digital consumer, and fintech. We love SaaS, and we've invested globally close to $4 billion in more than 230 companies in the past few years, and we're proud to have partnered with the founders of companies like Slack, Atlassian, Dropbox, DocuSign, and UiPath. As you know, many great companies have emerged on the back of the past 2 economic downturns. We have been lucky to be a partner with several of them. For example, Atlassian and DocuSign emerged on the back of the dot-com bubble, Slack, Dropbox, Cloudera, and CrowdStrike after the 2008 financial crisis. Now is actually a good time to raise money. From what I'm seeing, the financial environment in Europe is quite active despite the lockdown. At Accel, we have already closed 3 deals in the past couple of months just in Europe. One of them was entirely done remotely, and we have several portfolio companies which have raised round recently or in the process of doing so. So my answer to the question, can you raise money now, is without hesitation, yes, you can. But how can you make the process faster and put all the odds in your favor? Here are 5 quick tips coming from my recent experiences. So the first 3 tips thought before the process. The first one is do the hard thing first. If you need to readjust your plan or restructure, do it first and talk to investors after. Investors don't want to invest in a company which is a work in progress and which does not have a good visibility on what they want to achieve in the coming months. This current crisis is very different from the others in the sense that its impact varies greatly by business. I mean, different startups have been impacted in very different ways. On the software side, what we have observed is a wide range of outcomes. I mean, on the more positive side, some companies got a real boost from this crisis in healthcare, in particular. Doctorly, which is booking management system for doctors, is a great example of that, with the use of video conferencing for doctors just exploding. The second category of companies are companies we have seen literally no impact. There are categories like automation, for example. Think about RPA with UiPath or process mining with Celonis. We haven't seen these companies modify their plans significantly because of COVID. The third category, it starts with less positive, and this is probably what we have seen for most of companies, the 10 to 20% reduction in new business. This is what we have observed overall across many software companies. And then the last sections are the ones that are less lucky companies which are selling into verticals that are impacted by the crisis, like travel or retail, or companies selling into more vulnerable segments like small businesses, where the hit was harder. But so overall, if I step back, I would say that across our portfolios, most companies had to readjust their plan and reduce costs in some form. And this is the work that you need to do before starting a financing. Even if you're growing fast today, investors will need to see that you are well set up to tackle the unknown of the upcoming quarters, and they will want to see more conservatism on the cost side. It's always easy to accelerate. Much harder to cut costs along the way, especially in a fast-paced environment. So that's my first advice. My second advice would be try to be very crisp on value proposition and ROI for your customers. We are heading into a difficult economic environment. Buyers will look for a quick ROI. Overall, Q1 was a good quarter across our software portfolio, but the economic impact of the crisis will likely be stronger in the coming months. We really don't know what to expect in the second half of the year. So as enterprises will accelerate their digital transformation, they will most likely see budget constraints, and they will need to prioritize their projects. In this context, I think the most successful companies are the ones that will be able to show strong ROI to their customers. If you have not built an ROI calculator for your sales team, I would say now is really the time to do it. It will make such a big difference. Try to make it specific. The more factual the inputs, the better. If you can differentiate by vertical or size of customers, just do it. Use your creativity by showing a 10x return on investment. This will be key to success in the coming months, and it's really worth you and your sales team investing a lot of time into it. The third tip I would give you is to be very selective about the funds and angel that you approach, even more than you would in a normal time. Focus on existing relationships and funds with expertise in your area. I mean, making decisions on just video calls is hard. So talking to the right person make it easier. I think in the current context where travel is limited or inexistent, and we're learning every day about the new quarantine measures that are being set in place, it's unlikely that a lot of meetings will take place in the near future. So investors will have to make their decisions purely remotely. The same way, it will be harder for you, as a founder, to assess an investor. The two elements that can really make this process easier are, one, if you had interaction in person before COVID, I mean, that's obvious, but worth mentioning. I mean, usually there's a chance you have catch up with several investors before the crisis, and it's a very good idea to get back to these people. So at least you had that first contact in person, which is very important. And the second element, if you do not have the luxury of having people that you have met in the past, is to select investors with a deep knowledge in your area. I mean, the more knowledge you have in an area, the more likely you're going to be prone to make a decision as an investor. So I would encourage you to be very selective and filter the VCs along these two criteria. Focus on the people you have met beforehand and that you like. Screen the investor websites to target the right funds or the right partner within the funds who are very knowledgeable in your area. It will make your process much smoother. Now, the last two tips are tips that you can apply during the process. The first one, which I think is one of the most important of the 5, is to share good news soon and the bad news even sooner. Trust is key. The more you communicate during this process, the better. So, I mean, if I look back, a couple of months ago, I mean, I signed a term sheet with a company a week before the world locked down. This was not an easy situation for me or for the entrepreneur. I mean, most of the diligence I did before COVID seemed now irrelevant, and I needed to reassess my investment thesis to see how it would work in this totally different world. I was lucky, though, to have been able to spend a lot of time in person with the founding team, and the trust we developed in the past few months was not going to go away. But that trust, which is critical, it's a critical part of any investment. As you know, we invest in people, can easily be broken with lack of communication and misunderstanding. So fortunately, we closed the deal a few weeks later, and I must say that one of the most important factors for me was a regular update I had with the founder and the fact that he was very transparent on everything happening with the company. I mean, we're talking to each other, a couple of times a week, every time there was something new, he would send me an email. He was sharing the good, most importantly, also the bad. And, as soon as there was something that was not according to plan, he would drop me a note or, a text message. So we're fully in sync. I don't think there is such thing as over communication these days. It is never a good idea to hide or delay the bad news. On the contrary, I think if you show the investor that you're transparent, he will know there is nothing he does not know, and this is what will make me comfortable to move forward. And finally, my last tip is be patient. It may take more time than usual. The partnerships are more careful about deploying capital these days. In today's world where every day brings a different new perspective, things take more time, and we live in uncertain times. I mean, the reality from this week is very different from the reality from last week, and therefore partnerships are asking more questions. As a partner leading an investment, you feel like you need to turn the next card and the next card until everyone across the partnership is fully comfortable. I mean, this is a new reality and it's not going to change soon, but it's going to happen. It's not stopping the investment. It just takes a bit more time. So stay on board, be patient, and good things will happen. So I hope you find these 5 tips very helpful. Let me try to summarize them for you. First, do the hard thing. If you need to readjust your plan or restructure, do it first. Talk to investors after. 2, be very crisp on your value proposition and ROI for your customers. We're heading into a difficult environment. Buyers will look for quick ROI. 3, be very selective about the funds and angel you approach. Focus on existing relationships and funds with expertise in your area. 4, share the good news soon and the bad news sooner. There is no such thing as over-communicating these days. And 5, be patient. It may take more time than usual, but you will be successful if you put your heart into it. Any question, feel free to reach out on Twitter @P Botteri, and good luck for your fundraise.